Good morning, everyone. Welcome to Trading Together. I'm Mel Gacee. Today is Wednesday, December the 10th. Happy holidays. Like Christmas is 2 weeks away, and happy FOMC day. We should get some interesting fireworks as the day progresses. Right now, we've been sitting in a range. So we're range bound right now, but we are kind of slowly moving up. FOMC days can be challenging. Remember, FOMC is the uh, the committee that manages the rates, basically the federal rates, right? So we are waiting on an announcement today for rate cuts. We think that that is pretty much a foregone conclusion. We should get a 25 basis point rate cut today. So that's not what the market is waiting for. The market is waiting for the press conference. It's waiting for the dot plot. These are the things that tell the market what is going to be our financial situation moving forward. So moving into 2026, the market wants to know, what are we doing with rate cuts, and what are we doing, more importantly, with quantitative tightening and quantitative easing. So that sounds like a mouthful, but basically in a simple nutshell kind of way, quantitative tightening is when the Fed removes money and liquidity out of the system, out of the economy. Quantitative easing is when it puts money back in. Some people would call it printing money. We don't really print money anymore, do we? It's all pretty much digital. But the idea is that we are moving toward quantitative easing, meaning that we think the Fed is going to start injecting money back into the system like they did and have done in the past. So that's the idea of what's going to be happening today. Now, if you've never traded or you've never traded through an FOMC, the word of the day is caution, 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 caution. We have been sitting in a sideways choppy range for several days now as the market waits to see what the forward motion is from the FOMC. So we've been in this choppy sideways market. We've been in chop even this morning, as you can see. I'll zoom out a bit here so that you can see what I'm talking about. This is our chart for today. This is a minute chart. I am looking at the SPY. Now remember, the SPY is basically the representation of the S&P 500 index. You can think of it that way. It's an ETF. And it basically mirrors the S&P 500 so that we can trade the index. You can't trade an index, you can't own an index. An index is just a basket that holds these stocks. But if we wanted to own the S&P 500, if we wanted to own the NASDAQ, then we would use the ETFs that have been built over it. Some of the bigger ones are the SPY for the S&P 500, what we call the Qs or QQQ for the NASDAQ. We've got the DIA over the Dow, and we have the IWM over the Russell. These are the ETFs that have been built to own the index, and they will mirror the index pretty much exactly. So I'm trading the SPY. That's pretty much my bread and butter. It's what I do every day. I day trade the SPY. I'm a scalper. I'm in and out quickly. And the SPY chart is what we're looking at right here. I'm looking at the minute chart. I'm also looking at the futures over here on the right. This is the /ES. That is the futures over the S&P 500. Down here, I've got the VIX. The VIX is what's known as the fear gauge or the volatility index. And the VIX tells us what is the volatility on the what is the volatility that is in the market right now? The VIX basically gauges that by going out and looking at the options over the S&P 500. So the VIX is, its nickname is the fear gauge. It's known as the volatility index. And as the VIX moves down, That tells us that fear is leaving the market. We would expect the market to come up. As the VIX moves up, that tells us that fear is increasing. We would expect the market to move down. And it works like that pretty consistently. You can see that here's the VIX right here. If we took this VIX chart and we flipped it upside down, we could lay it right over the SPY and it would look almost identical. So right here where the SPY peaked at 10:37 Eastern is right here where the SPY bottomed at 10:37 Eastern. Then it peaks again at 10:50, bottoms again at 10:50, peaks again at 11:03, bottoms again at 11:03, and is peaking now on the SPY, bottoming on the VIX. So just remember that the VIX runs inverse usually to the SPY. And so we use that as a bit of an indicator to see really what the feeling, what the fear, what the emotion is in the market. That's how we use the VIX, okay? So right now, if we zoom out a bit and look at the VIX in the bigger context, we've got the VIX sitting right at its flat line, just down about 0.2%, sitting at 16.8. As we move toward FOMC today, we will likely see that VIX jump up or plummet down as we see the market respond. We will see the market respond to the FOMC announcement, but mostly we will see the market wait for the presser. So there's a press conference after the announcement at 2:30 Eastern. So 2 o'clock Eastern is the FOMC rate announcement, which we expect to be a cut. And then at 2:30 Eastern, we'll get the presser. All right. So again, today we're looking at a bit of a up and down, bit of a choppy mess here. We did get a little push over this high. So we opened up, came down, came up, came down, came up, came down, came up, came down, came up. But we were building this little bitty top right in through here. And in the last 10 minutes, 15 minutes, we pushed up through that. We're building a little bit of a higher top right here, right now. So how do we trade this? As we are awaiting FOMC, I'm very, very cautious on FOMC days because usually the order of business is sideways and chop. And this is where scalpers and day traders can get chopped up if you're not careful. So you think it's going up and you grab a call and then boom, it plummets. And you think it's going down and you grab a put and boom, it comes up. So this is chop, up and down, wavy, wavy. So on FOMC days, I'm usually very, very cautious. Now, if I see the range, which I do, I can see the range here, we can trade that range. So right here looks like we could be building a small top. We don't know for sure until it finishes and it rolls over. But if it finishes here, building a top, and it rolls over, we could consider puts. We've got enough room down to this bottom here that risk might be worth it. I don't have enough confirmation at this moment to justify any puts. I'm just watching. And again, very cautious on days like today because I've been chopped up before and it's not much fun. A little bit like a meat grinder. So, all right. Let's talk about how we do take trades. All right. And by the way, if you're here this morning, drop your name in the chat. I would love to meet you. I would love to answer any questions or comments you might have. I want this to be an interactive place, and I want people, especially people that are newer to trading, I want you to feel comfortable here. I don't want you to be afraid of newbie questions. I really want to make trading, I want to simplify trading for you. I want to make it easier for you. So if you're here and you haven't said hi yet, drop your name in the chat, say hi, ask me your questions. Don't be afraid. All right. This is friendly and interactive place. All right, let's get back over here to our charts. And we're still kind of building this little top, although it is giving us this little upward movement here. So let's see what we get. And let's talk about how to place an order. If you're brand new, you might not have done that before. So while we're waiting for a trade, because I've got no trades right now. So while we're waiting for a trade, let's talk about how to place an order. When I trade, I'm what we call long the options. So I'm long single leg directional trades, meaning that I am going to be the buyer of the option and I am looking for a single direction, right? So we can do things like spreads and other types of trades that are not necessarily directional. They capitalize more on the market staying within a range, which today is a good example of. Um, but but for me, by and large, I am a directional single leg trader. So what I'm looking for on the SPY is a movement up or a movement down, and I'm going to trade calls or I'm going to trade puts. So calls are going to be for when we think the market's going up. Puts are going to be for when we think the market is going down. When we look at the option chain, we can see that we've got calls on the left hand, on the right hand side. SPY is the product that I'm trading almost always. Like I said, that's my bread and butter. I do trade other things, but SPY I like because I trade what we call 0 DTE, 0 days to expiration, meaning I'm going to trade options that are expiring today. Now, this is a more risky practice, but I take a lot of risk out of it by tracking these very closely, and I don't let these options go to 100% loss. I stop out, what we call stop. I stop out at a certain percentage. I don't let them get too far away from me. So I'm looking at 0 DTEs, 0 days to expiration, and I'm looking at the first option in the money. I like a delta of 0.5 or better. Just that's a little fancy term for I have a little bit more assurances that it's going to move, the option will move more closely with the underlying stock, okay? So when I get ready to trade, let's say I wanted to take a call here, I would come out here, I would hover over my first December 10th call in the money, which is the 683. In the money just is its strike. The SPY is currently trading. That's the first option in the money. So I would come over here, I'd click on my buy button, I'd get my little buy order down, and then I would confirm and send that order. I'm not going to do that right now. I'm not ready to take a trade. I think that we could be topping out here. So I'm going to give this a little time to see if we're going to get a rollover. I'm not taking any calls right now. But that's how we would do it. That's how we would take those trades. All right. Hello, Des. Super new to day trading. Welcome, welcome. And thank you so much for being here. I really welcome new traders. I welcome experienced traders. You're going to that once you're comfortable following me, I have a 90% win rate. I'm not bragging. I've developed a system over a lot of years of background testing, and I have my own system, I have my own indicators, and I trade with a 90% win rate. Sometimes it sinks below that a bit, sometimes it goes above it a bit, but by and large, I stay in that window. There we go. Here's a little round over here. This is what we're looking for. All right. All right. Des saying that's amazing. Thank you, Des. I appreciate you. So it is a good win rate and it's unusual, but I will say this, I take small wins, tiny wins, usually 10%, sometimes less. And my losses, I'm going to keep those under 50%. So with the 90% win rate, if you keep your position size consistent, that's a winning formula. So it sounds like you're going to make a lot of money really fast, but when you have a 90% win rate and you're only taking 10% wins and 50% losses, you're profitable consistently, but it's not speedy, right? There's a lot of people will get on YouTube and they will, they will claim that they $5,000 on one trade, and maybe they did, maybe they didn't, but I'll tell you, Most are not. Most are not. I do this for a living. This is how I make my living in trading. And my experience has taught me that small, consistent base hits is what works for me. Okay. All right. Rubio. And good morning. What are we on? Good morning. Good morning. I am live trading the SPY. I am day trading live on the SPY. I'm looking for a trade. I'm a scalper. So welcome. It's so nice to meet you. And thank you for joining. This stream is for teaching market analytics. So I'm going to analyze the market, and it's for live trading. So right now, because it is an FOMC day, I'm very cautious, not taking any trades at the moment. But what I'm waiting for right now is to see if we get a little round over here. Right now, we've made, this is the minute chart on the SPY. We have made a little temporary top right here. So I'm watching here to see if we're going to continue up or if we're going to round over and start moving down. So right now I'm not in any trades at all. I don't have any solid signals just yet. I'm being patient. And I'll tell you this, 95% of trading is being patient, waiting for the right setup. And when you're in the trade, being patient for it to play out the way you would like. All right, Des, slow and steady wins the race. Absolutely, that has been my experience. So I do coach a lot of traders, and I do have some people that I coach that, they want to hammer these really big wins, and they're putting way too much money in terms of their account size. They're putting way too much money at these trades, and they blow up their account. So you want to have a consistent position size and a consistent win rate before you throw big money at trades. So that's my caution to you. I've been trading a long time. I personally have blown up many accounts in my day. So I've learned how to protect my capital, and that's the number one name of the game. All right. So here we are, still kind of getting this little slowdown right here at the top, and that's okay. What I'm waiting for is a bit of a drop. Let's see if we can get that. Here it comes. And I'm just waiting to see if we have any confirmation on a drop and if I want to get into a put here. This is what I'm analyzing right now. I am looking at the 684 puts. I'm not in them, just looking. So I kind of have this order ready for if this thing starts to move the way I like. And that's my little puppy in the background on her squeaky toy. So she's 5 months old. She's become an unruly teenager. All right, so not quite a drop yet, even though we do have a bit of a round over here. I'm going to go back over to the chart. Bit of a round over here. Just waiting to see if they're going to try to drop this. Right this minute, they're not letting it go just yet. There we go. That's better. Moving kind of slowly right now. I'm going to give it some space. And make sure I understand your question, Rubio. You're asking what is SPY on ES? The SPY is the ETF over the S&P 500. The ES is the futures over the S&P 500. So as you can see, they're moving pretty much exactly in sync with each other. So here's the SPY, here's the ES. They're moving really in sync with each other. And so I have it up here on my chart. Even though it's basically doing the same thing, I do have some different indicators on it that I'm watching. All right, I'm going to give this put trade a try. I'm going to keep an eye on that. Let's see. I'm in the 684 puts. Let's see if we can get this to drop just a bit. I'm not looking for anything crazy winning wise because today is choppy. I'm taking small wins today. I've already taken a few today and they've really all of them been like 4% or less. Usually I want 10%, but on a choppy day, I'll be more cautious. All right, nice drop, nice drop. Okay, I'm up 5%, punch it, I'm gonna get out. We'll take that win. And again, I think it'll come right down here to this VWAP, but I'm gonna jump out sooner. So that was a winning trade. We got 5% on that one. And again, taking smaller wins today because of the choppy nature of the market. But hey, those, like we said, those little ones add up. I do think we'll come down here and test this VWAP. So let's talk about the indicators on the charts. This white line right here is the VWAP. The VWAP stands for the volume weighted average price. It is virtually the same as a moving average, except that it adds in extra weight for the volume. So these bars down here are the volume bars. You can see at certain times the volume really pops up and certain times it really comes back down. So the VWAP takes into consideration that we have an average price, but then if it sees a big volume at a certain level, it's going to give a little more weight to that. So the VWAP is also used by a lot of institutional traders, so I keep my eyes on it. And the VWAP tells me in kind of a simplistic way, what is our direction right now? What is our direction right now? If someone were to ask you, what do the charts look like right now? What's our direction? I would look at the VWAP and I would say, well, generally speaking, we're slightly trending upward because we've been over the VWAP most of the morning. We're over the VWAP right now. However, we are getting a slight movement downward. So our movement today is slightly upward, but really, like I said at the beginning, just choppy. And the VWAP tells you that. A rule of thumb for beginning traders, this is a very good rule of thumb, is take calls above the VWAP and puts below. Now remember, calls are for when we want the market going up. Puts are for when we want the market going down. We can make money when the market goes both ways, right? If you're brand new to trading, that's an interesting concept. We can make money when the market goes up and we can make money when the market goes down. That's very cool. That was cool to me when I first learned it as a brand new trader. And so the VWAP tells us what general direction we're going in. Okay, so see how I got out right there, guys? Look at, I took this put. That means I thought the market was going down. I took the 684 put, which was the first put at the money like we talked about. And I took it right in here. And then we got this little drop, and just this tiny little drop, you guys, got me 5%. So that's the beauty of trading 0 days to expiration. Those options move really nicely in your favor. Tiny little move like this got me 5%. But I jumped out quickly. I'm cautious today because, like I said, it's choppy, it's FOMC. I'm going to take tiny wins today. So look what happened. This was the exact right exit. And I don't always get it right, but today I did. Got the right exit here as it turned and gave us a wee bit of a bounce. So now we're moving back up. Could we take calls? Yes, we could. However, we've only got a tiny space between where we are here and the most recent top. So this right here is our most recent top. And this is where we're trading right now. We don't have much room. So for me, there's not a lot of reward to the risk. So there's a risk that this thing hits the top and comes down and drops again. Could keep going, we don't know. But the risk for me would be, we've only got this tiny space for me to make money if it decides to come and turn downward, okay? All right. All right, anyone with questions? Right now I'm waiting. Again, we're still in waiting mode. I've taken about 5 winning trades today before I jumped on the stream. And like I said, they've all been under 5%. That is not the normal for me. Normal for me is 10% or better on my winning trades. But again, on a choppy day, I'm going to take my lunch money and call it good. All right. Des asking, how do you decide how many trades you'll take in the day? Is it instinct? That's a great question, Des. Thank you for asking that. There are a couple of deciding factors. If you are in a small account and you cannot day trade, let me back up. There are 2 main types of accounts in a brokerage. Main types. There's lots of accounts, but 2 main kinds: margin or cash. The margin account, think of it as a credit card for trading, right? If you get a margin account, they're going to lend you some margin for you to trade on. So let's say you open an account with $1,000, they might give you up to $2,000 to trade. It depends, right? They make their decisions how they make them. So you might have $1,000, they're going to give you $2,000 to trade. However, there is a pattern day trade rule that says, this is set by the SEC, you cannot day trade in an account, that in a margin account that has less than $25,000 in it. So if your account is less than that, they are not going to let you day trade. A day trade is defined as in and out of the same product in the same day. So that's all that I do is day trade, right? So if you want to day trade, you're going to need to get a cash account. Now, a cash account says you can trade in and out as many times as you want, but you can only trade up to the max value of your account. So if you have $1,000 account, you can trade 10 times at $100, 2 times at $500. But when you reach your $1,000 of trading, you're done. You can't trade anymore. So that is partly what will define, Des, how many trades you take in a day. So if you're in a cash account and if you're day trading in a cash account, you can trade to the max value of your account. Then you want to decide how big your position is going to be. So if you're day trading options on the SPY, your average price for one contract, average, they move around, but usually between $100 to $300 when we're talking about options that are in the money or at the money. I don't recommend trading options that are too far out of the money. It's not going to go well, usually. It's not going to go, they don't move as quickly in your favor. So if you're trading at the money, same day expiration, you're going to pay about $150 to $300 per trade. And if you're in a cash account, That's going to tell you how many trades you can make. Now, if you have a larger account, I would recommend keeping your trades to no more than about 3% of your account value. So let's say if you have a $100,000 account, then you'd want to keep your trades to $3,000 or less, and that would be 3% of your account. If you're trading conservatively like that, you can lose some trades and it's not going to hurt you. Now, if you're in a smaller account, you don't have that luxury. If you're in $1,000 account and you're trying to day trade the SPY, your trades are going to be over 10% of your total account value, meaning that if you're in a trade for $150 and you have a $1,000 account, you're in for 15% of your account. You need to be careful with that trade, because if you let that thing go to full loss, now you've just lost 15% of your account. You can only do that 8 times before you blow up your account. So that's a long explanation to your question, Des, but I appreciate it, and it's a very good question. So if you want to day trade and you don't have enough for the $25,000 margin account, ask for a cash account. When you open your brokerage account, they're going to automatically try to put you in a margin account, because guess what? They make money giving you that credit card. So you have to specifically ask them for a cash account. You have to say, no, I don't want a margin account. I want a cash account. All right. All right, Des saying, thank you. That makes perfect sense. Appreciate the detailed info. Thank you. I appreciate you. I appreciate you asking that question. All right, so you can see how we're just floating right here. We haven't gone anywhere. We're just floating, a little bit like a wave, right? We're just looking like a wave on the ocean, just floating along sideways. This, like I said, when we were talking about this call here, I could have taken the call, but look, we got not even up to the top, just a little short of it, and it's starting to slow down here. So this is why I'm not going to risk capital on this type of a move. So I would wait, and I did wait. All right. So we're coming up close to the end of the stream. I got a little bit of a late start this morning. I was stuck in a trade. I couldn't get started with you, but I am here every day at 9 a.m. Mountain, and I have pretty much 3 goals on this channel. One, I want to really help new traders. I really want to help new traders, and experienced traders, you are welcome as well, because like I said, I've got the 90% win rate. Follow me, I'll help you. But I really want to help new traders figure it out, number 1. Number 2, I want to day trade live in front of you. I want you guys to see that it can be done. There are a lot of phony balonies out there telling you, you know, I'm driving a Lamborghini and I trade once a day for 10 minutes. Well, it's baloney. It's not true. It's not true. I've been trading for almost 20 years. It's not true. So 1, I want to help new traders. 2, I want to day trade live. And 3, I want to be informational and provide market analysis, economy, big macro picture analysis for anyone who's interested, because it does affect the market. So the big picture does affect the market. All right, so those are my goals for this channel, for this live stream. And I'm just so glad that you've joined me here this morning. It makes it so much better to trade with friends than by yourself. Trading can be a lonely business. So I want to build community here, and I want people to feel comfortable and a place to learn and grow. All right, so let's see. Rubio asking, do I only do options? Yeah, Rubio. Now, I do trade crypto. I'm holding some crypto long term. I think crypto is going to move up. I think Bitcoin and Ethereum, now is a good time to buy. That's not a recommendation. That's what I think. Don't go out there and buy crypto on my recommendation, right? But in my analysis, I do think crypto is going to move up from here. So I hold some crypto. I don't do a lot of long-term portfolio holding, and I'm not saying it's wrong. You've got to have a retirement account. You've got to be preparing for your future, and time in the market is very important. However, for my style, I'm rotating most of my capital through my day trading practice. So because that's where I generate my profits from. So yes, I mostly trade options. Although, like I said, I do hold some crypto. I am holding some um, other stocks, but not a lot. Most of my capital is dedicated to this type of trading here. Great question. So thank you for that question. All right, and Des, I love crypto and I'm a long-term holder too. Love it, Des. Excellent. I think that you're going to be fine. I'm holding some Bitcoin and Ethereum, and I know that in the crypto world, that might be a little frowned on, but I'll tell you, I think they're both getting some institutional interest and support, and I think we're moving up into 2026. That's just my thought process on it. So again, not a recommendation. All right. Well, guys, it was really nice meeting you, Des and Rubio. I appreciate you so much. Appreciate you jumping in there, asking some questions. Like I said, we'll be back again tomorrow morning at 9 a.m. Mountain. And be careful today. If you are trading, watch the FOMC. It's going to give us some wild herky-jerky spikes. That's what it usually does. So be careful with that if you're a trader. And if you're not trading just yet, take some time and watch it today. Get familiar with some of the crazy movements that it does as we get that FOMC announcement and press conference. All right, guys, I appreciate you. I love meeting you both and really would love to see you back here tomorrow, 9 a.m. Mountain. Thanks again, and we will be back. Bye for now.